Good day, ladies and gentlemen, and welcome to the Mining News on Commodity TV. This video is distributed and paid for on behalf of Canada Nickel, Uranium Energy Corp, Fortuna Silver, Mogotes Metals, and OR Royalties. Canada Nickel has released its 2024 ESG report showcasing not only its environmental progress, but also its strategic partnerships with indigenous communities. In particular, the innovative CO2 tailing storage project and local value creation in the Timmins area strengthened the company's profile as a sustainable nickel developer. This focus facilitates access to ESG capital and strengthens the company's valuation profile, a positive tailwind for the share price. The US government has placed Uranium Energy Corp's Sweetwater uranium project in Wyoming on an accelerated permitting schedule, a clear sign of the strategic importance of domestic uranium production. Sweetwater is to be developed into the largest dual-feed in-situ facility in the US, which will boost domestic production and significantly shorten the regulatory process. This means significant efficiency and timing advantages for UEC and its project. Fortuna reported a 53% increase in indicated resources to 724,000 ounces and a nearly doubling of inferred resources to 285,000 ounces of gold for the Diamba Sud project in the Senegal. With the planned release of a PEA in the fourth quarter this year, Fortuna is taking the next step in its development, accompanied by a further exploration drilling program to expand the open zones at surface. Excellent news from Mogotes Metals. The up-and-coming exploration company has presented an integrated 3D geophysical model in the Vicuña district with large-scale anomalies in the Los Mogotes target area, just 2.5 kilometers south of Filo del Sol, one of the largest copper discoveries of the last decades. The exploration campaign is scheduled to start in October and could unlock significant share price potential if drilling results are positive. Copper is hot, and Mogotes Metals is located in one of the hottest regions. OR Royalties presented impressive figures for the second quarter of 2025. With 19,700 gold equivalent ounces calculated, production remained virtually flat, while revenue improved by a strong 27% to $60.4 million thanks to higher precious metal prices. The operating cash flow rose by a remarkable 34% to $51.4 million, accompanied by a very high cash margin of around 96%. The group achieved a net profit of $32.4 million or 17 US cents per share, a clear turnaround after the loss in the previous year. OR Royalties was only financially strengthened by an increased credit line and at the same time increased its quarterly dividend by 20% to 5.5 US cents per share. The key figures reflect the strong business model, low operating costs, full capital and profit impact from precious metal prices. OR Royalties is thus well financed with approximately $50 million in cash reserves, reduced debt and an expanded credit facility, and remains on a clear growth path for 2025 and the coming years. You can find all the information on our Commodity TV app in German and English, along with everything you need to know about commodities. Please note the disclaimer. The stocks discussed are or will be part of the SRC Mining Special Situation Certificate, and SRC, its employees, I or myself may or are shareholders of the companies. Thanks for watching us, and bye-bye from Switzerland.